Alrighty, it looks like we have a good number of people on, and we do have quite a bit to cover today, so we can go ahead and get started. Just a couple of housekeeping things before we begin. We'd like to let all of you know that this workshop is being recorded and informational materials will be available after the session. We do post all of our recordings on our YouTube channel, so you'll be able to watch this recording as well as some of our other past recordings there. We'll also send out a follow-up email, which will include a recap of events that you missed, as well as some more instructions for helping you get started with Savi. If you have any questions, please feel free to put those in the Q&A. I see a couple of you have already put some in there, which is great. We will do our best to answer as many as possible, so we'll have a break for some questions out loud in the middle and with whatever time we have left at the end. And finally, if you need to use closed captions, I'm sending a link in the chat with instructions on how you can turn those on. So thank you again for being here today. My name is Jobe, and I am the Senior Borrower Advocate here at Savi, and I'm also the Manager of External Affairs. So I work very closely with our borrowers, helping you all to understand things about your student loans, advocating for issues that are affecting you. So I'm really happy that you're all here, and I'm looking forward to a great session. In today's session, we will go over a quick intro as to who Savi is and what we do for those of you that are new to us. After that, we will talk about a recap of events that happened in 2023, covering everything that happened with student loans last year that you need to know. We'll then look ahead to 2024, talking about some major student loan events that are going to be affecting borrowers this year. And finally, we'll wrap up with some next steps on how you can get started with Savi. So for those of you that are new, here is a little bit about us. We are a public benefit corporation, which means it exists in our mission and our charter that we are here to serve the public. It really is our goal to help out as many people as possible. So we started around 2017 when borrowers were first eligible to apply for public service loan forgiveness. Borrowers that applied for that program had a less than 1% acceptance rate. Over 99% of borrowers that applied for that program were denied. We saw that there was a need, that there was a lot of confusion around these existing federal programs. So we stepped in to start educating borrowers, helping them understand the requirements, and helping them to successfully apply and receive this forgiveness that they have earned. We're run by experts and advocates that have over 2 decades of experience, and many of us also have student loans of our own, myself included. So we have that insider industry knowledge that helps us to better serve all of you. And finally, we're focused on savings. It really is our goal to help all of you find as many savings as possible. And we do this by helping you see your eligibility and enroll in programs like income-driven repayment plans and public service loan forgiveness. So with Savi, we make it easier to manage your student loans. We help simplify the process of seeing what you qualify for and enrolling. So all within your Savi account, you'll be able to see what's available to you and get enrolled, doing any necessary steps right in your Savi account. Working with us, many users reduce their student loan payment by an average of $150 a month and qualify for about $20,500 in loan forgiveness. So these are some really great savings. We've helped users find over $1 billion in projected loan forgiveness to date. And best of all, we just have one application for you to complete. After you've entered your information, you'll see those personalized options showing you exactly what you qualify for. So looking back to 2023, 2023 was perhaps one of the busiest years ever in student loan history. Student loans were in the news more than I can ever remember them being in the news. There were lots of updates to programs. So let's take a look back at some of those biggest changes that affected borrowers last year. First, the most important were that payments did resume. The payment pause was in effect due to COVID from March 2020 all the way to October of 2023. So for over 3 years, borrowers did not have to make payments on their student loans. When that pause ended last fall, borrowers returned for payment, and it was not without bumps in the road. So we did a lot of work around preparing borrowers for these payments to resume, helping borrowers transition smoothly into repayment, and doing our best to support them as they had to make these payments for the first time in over 3 years. Interest resumed on all federal student loans on September 1st, and everyone's payment was due for the first time in October. So now we're back in the swing of things. Borrowers are making their monthly payments, interest is accruing, and that's why it's more important than ever to be knowledgeable about your student loans, be empowered to manage them, and making sure that you're utilizing the best options. Each month, your servicer will send you a notice of your payment amount and your due date, letting you know what to pay and when to pay. We encourage you to confirm who your servicer is and make sure that your contact information is up to date at studentaid.gov. That way, your servicer can reach you with all of those important notifications. With the payment pause, that was a special situation. It was unlike anything that had happened with student loans before, and because it was such an extraordinary circumstance, they are allowing you to count that time towards forgiveness, even if you are not making payments. So what they're doing essentially is treating it as if the payment pause was not there and as if everyone was paying on their loans. The way that this works is that for those of you who are pursuing public service loan forgiveness, going back to March of 2020, for every month that payments were paused, but you continued working in public service, you can count that month as if you made a payment. This means that now that the pause is over, that is over 40 months that you can get credit for. All you need to do is submit an employment certification form for the employers that you worked at during the payment pause. Mohila, who's the servicer that manages that program, will then go through and count up all the payments you made while working at that employer that count towards forgiveness. For those of you that are pursuing other forgiveness programs like income-driven forgiveness, those months will automatically be counted without any action needed from you. So if you're pursuing PSLF, you can get credit for the payment pause by submitting an employment certification form. If you're pursuing IDR forgiveness, you'll automatically get credit for the paused months. As I mentioned, the return to repayment was not without bumps in the road. To try and help borrowers ease back into repayment, the Department of Education created a 12-month on-ramp period. This period started on October 1st of 2023 and will end September 30th, 2024. Essentially, this on-ramp acts as a safety net. So normally, if you didn't make a payment, you would be penalized, you could incur fees, and it's an all-around bad situation. But with this safety net, if you miss any of your payments, there are some ways that you can benefit and not be penalized. So during this time, if you make a late payment, if you miss a payment, or if you only make a partial payment, that will not be reported delinquent or defaulted during this period. This means that if you miss any payments, it won't be reported on your credit score, you won't incur any late fees, and you'll be able to miss that payment without worrying about being penalized. It's important to note, though, unlike the payment pause where you didn't have to make a payment, payments are due and interest is still accruing. Even if you do not make a payment, interest will still accrue on your loans. And if you can make your payment, you should do it, especially if you're pursuing PSLF. If something happens and you can't make your payment, it's not the end of the world and you will not be penalized for it. But if you don't make that payment, that time will not count towards IDR forgiveness or PSLF. So there are similar benefits to the payment pause where if you don't make a payment, you won't be penalized, but it's important to note the payments are due and you should make it if you can. Also last year, the Department of Education released a new income-driven repayment plan. This new plan is called the SAVE plan, and it is one of the most generous repayment plans that are available. So for those of you that are familiar with income-driven repayment plans, the old plan that was offered was called Repay. SAVE replaced the Repay plan, so any borrower that was enrolled in Repay has been moved to SAVE and had their payment recalculated. This new plan has a lot of benefits, and one of the biggest is that unpaid interest is covered by the Department of Education. Time and time again, we have seen Borrowers that are making monthly payments, they're doing what they're supposed to do, but their balances are increasing because of high interest rates. One benefit of the new Save plan is that as long as you're enrolled and you're making your minimum monthly payment, the Department of Education will cover any unpaid interest for you, which will prevent your balances from increasing. So for example, say that you accrue $100 of interest per month, but your monthly payment is only $50. The Department of Education will cover the remaining $50 for you so that your balances do not increase. We like to clarify that this does not change your interest rate, and interest is still accruing. However, if your payment doesn't cover all the interest that accrues that month, the Department of Education will cover the rest of it, which will at least prevent the balance from growing. In addition, the Save plan is changing how payments are calculated. So on an income-driven plan, your payment is not based on your total income. It's based on a portion of it called the discretionary income. Basically, what the Department of Education does is they set aside a portion of your income to cover the essential costs of living. The leftover amount is called discretionary income, and that is what your payment is based on. Discretionary income is calculated by comparing your income and situation to the poverty level for your location and family size. What the Save plan is doing is taking a higher percentage of your income and protecting it from repayment. It can get confusing, so a much easier way to think about this is that on the Save plan, no borrower that is earning $15 an hour or less will have a monthly student loan payment. Any borrower earning more than $15 an hour will still see reduced savings, since less of your payment will be counted when calculating your payment. Later this year, in the summertime, more changes are coming to the Save plan. So right now, everyone pays a flat 10% of their discretionary income. But starting this summer, borrowers with undergraduate loans will only pay 5% of their discretionary income. If you have graduate loans, you'll remain at the current 10%. And for those of you who have both grad and undergrad loans, you'll pay somewhere between 5 and 10% based on the breakdown of your loan types and your balances. So there's a lot of benefits to this plan. The great news is that you can enroll right now. Savi does support enrollment, and we can help you see what your payment would be and submit the application to enroll once you've completed your main Savi application. And next up, as borrowers returned to repayment, unfortunately, we did see some servicer issues start to pop up. So we said that that return to repayment wasn't as smooth as we hoped it would be. And almost immediately after payments resumed, borrowers started experiencing issues. Some of the most common that we saw were that borrowers received a late billing statement or no billing statement was sent at all. This resulted in borrowers not knowing how much was due or not being given enough notice to make that payment. We also saw borrowers have their payments miscalculated, whether they were enrolling in the Save plan or receiving billing amounts for the wrong amount. Several borrowers did receive bills for the wrong amount and were told to pay an amount that was different than what they really owed. So for example, in some cases, we saw borrowers who only had a normal payment of $100 being billed for $200 or $300. Sometimes the billing statements never came at all. So there was a lot of issues around determining what payments should be and sending them on time. And something that has affected almost everyone are long wait times. Application processing times are at record highs. For example, enrolling in an income-driven repayment plan, we saw processing times of up to 8 weeks. Applying for public service loan forgiveness, those processing times were around 12 weeks. And it was virtually impossible to reach your servicer because phone wait times were sometimes hours long. The good news is that even though all of these issues did happen, servicers are already taking steps to correct them, and many will be resolved automatically without any action needed from you. You may see an administrative forbearance applied to your account as your servicer works to correct this issue. All this means is that you are affected by these issues, your servicer is correcting them, and the administrative forbearance is in place so that you don't have to make a payment while the issue is corrected. Once they are finished fixing everything, the administrative forbearance will be lifted and you'll return to repayment. If you are continuing to experience any of these issues, please do not hesitate to reach out to us. We here at Savi are always more than happy to help you. And that is exactly why we're here, is to help fight for you and ensure that managing your loans is as easy as possible. So if you're experiencing any of these issues, please let us know so that we can work with you and your servicer to help get them corrected. In some severe cases, if the issues are extreme, we may even recommend submitting something called a Consumer Financial Protection Bureau complaint. The CFPB for short is a government organization that helps oversee servicers and other businesses to ensure that they are acting fairly. So if there are any egregious cases where you are affected by these issues, we can help escalate it to people who can help get them resolved. That way you can know that your payment is right, your applications are being processed, and that your loans are in good standing. So that's an overview of what happened in 2023. 2024 is ramping up to be another busy year for student loans. So let's take a look at what's going to be the most pressing issues as we enter the new year. First is the payment count adjustments. We've already been talking about these. If you've attended any of our past webinars, you may have seen some emails from us about this, but this is the next deadline that's on the horizon. So these payment count adjustments are a one-time initiative to address historical failures in administering student loans. There are a lot of requirements to meet whenever you are enrolling in these programs, and historically, there's been a lot of confusion around them. Whether borrowers don't know about a requirement, they're making payments that don't meet them, there are servicer issues where they have been wrongly putting borrowers in forbearance. There's been a lot of confusion, wrongdoings, and more related to student loans. So these payment count adjustments are an attempt to correct the course. What they'll be doing is providing credit towards income-driven repayment forgiveness and public service loan forgiveness for any repayment status. So any past time where you were in repayment will be able to count towards forgiveness. Certain periods of forbearance and deferment will also count, as well as any time before loans were consolidated. So these account adjustments are going to be very beneficial because they're going to give you credit for basically every past payment that you've made. The adjustments are already underway, and the Department of Education is going to continue identifying eligible borrowers so that they don't have to wait to get relief. You may have heard in the news recently about more borrowers receiving forgiveness. For borrowers that have already been paying on their loans for 20 or 25 years, they are already getting this loan forgiveness, and it's happening in waves approximately every 2 months. So some of you may have already paid long enough to have your loans forgiven. Some of you may receive a notification soon that your loans will be forgiven. For those of you who aren't at the forgiveness threshold yet and are still making your way to the finish line, the Department of Education expects that these adjustments will be done by July 1st, 2024. As I mentioned, these adjustments are a course correction, and they're going to be giving people credit for more past payments that did not previously count. The Department of Education estimates that borrowers will receive at least 3 years' worth of additional credit towards loan forgiveness, and many will get their loans entirely forgiven as a result. Just since last summer, the Department of Education has already approved almost $44 billion in debt relief for more than 900,000 borrowers. So as you can see, these adjustments are going to be very beneficial. They're already benefiting a lot of people, and we want to make sure that you know about them so that you can take any necessary steps to benefit from them as well. That's a high-level overview of it, but what specifically will they be giving you credit for? So what they'll be doing is going into every single borrower's account and reviewing their entire repayment history. Times that previously did not count towards forgiveness will be updated and counted as if you made a normal, regular payment meeting the requirements. So you are going to get credit for any month where you were in repayment, even if that payment was partial, late, if you had the wrong type of loan, or if you were on the wrong repayment plan. You'll also be able to get credit for any months where you were in forbearance for more than 12 consecutive months. So if you were in a forbearance for 12 consecutive months or more, that time will be updated as if you were making payments during it so that it can count towards forgiveness. If you have more than 36 cumulative months, that time will also be updated as if you were making payments. Very similarly, any month where you were in deferment before 2013 will be updated as if you were making payments. So for military deferments, cancer deferments, economic hardships, all of those will be updated. The only exception is in-school deferments. So anything before 2013 that's a deferment will count, except in-school deferments. And finally, any month of the above periods will count, even if it was before you consolidated your loan. So if you, for example, have a FFEL loan and you consolidate it, you'll still be able to benefit from these adjustments, and all of these periods of time before consolidating will be counted. So what's required of you to be included in these adjustments? They will be automatic for borrowers who have the correct type of loans. So to receive these adjustments, you must have direct loans or FFEL loans that are held by the Department of Education. This means that those of you with loans that are not held by the Department of Ed are required to consolidate. Specifically, if you have any commercially held FFEL loans, Perkins loans, or HEAL loans, you'll want to consolidate your loans to be included in the adjustments. This is the group that is required to consolidate. If you have this type of loan, you do not consolidate, you will not be included in these adjustments and you will not benefit from them. Some of you may have loans from different time periods. While you are not required to consolidate, we are recommending that you do. And here's why. If you consolidate loans that have different payment counts, the higher payment count will be applied to your new loan. So for some more insight, loans earn progress towards forgiveness individually, and they have individual payment counts. So for example, if you go to school for undergrad, you take out some loans, and then maybe 5 years later, take out some more loans for grad school, those loans are going to have different payment counts. Your older loan has a higher count, meaning it will be forgiven sooner. But if you were to consolidate all of these together into one loan, they will apply the higher count to your new loan, making all of them eligible for forgiveness at the same time. So any of you who have loans from different time periods spread out, we are encouraging you to consolidate to make them have one payment count and be eligible for forgiveness sooner. It's also in your best interest to consolidate if you have any non-direct loans, like FFEL loans or Parent Plus loans, especially if you're pursuing public service loan forgiveness. So for public service loan forgiveness, if you recall, you're required to have direct loans in order to enroll. By consolidating into a direct loan, you'll be able to get credit for all your past payments, but get the correct type of loan that's needed to enroll in PSLF. So if you are required to consolidate, you must do so before April 30th, 2024. As long as you submit the consolidation request before that date, you will be included in the adjustments. If you're consolidating for the purposes of just benefiting, you will still need to consolidate by then. So anyone consolidating for the account adjustment has to do it before April 30th. If you consolidate after that date, it will not be included in the adjustment rules. So now let's take a brief moment to answer some frequently asked questions. These are questions that we hear from borrowers all the time about and want to answer for you to help you understand these adjustments and other things related to your student loans. So do I need to consolidate my loans for the payment count adjustments? Again, you are only required to consolidate if you do not have loans held by the Department of Education. So this would be people with commercially held FFEL loans, Perkins loans, or HEAL loans. They are required to consolidate. We are encouraging people who have non-direct loans to benefit from the adjustments and consolidate. So anyone with Parent Plus loans or FFEL loans can still benefit by consolidating. It's also in your best interest to consolidate if you have those loans from different time periods, because they'll apply the highest count to your new loan. How can I get my loan forgiven? So there are two main programs that borrowers can benefit from to receive student loan forgiveness. And these are public service loan forgiveness and income-driven repayment forgiveness. For public service loan forgiveness, this forgives your remaining balance after you've made 120 payments on your loans. These 120 payments do have some specific requirements they need to meet, though. So first, you need to work full-time in public service. You also need to have direct loans, and you need to pay on an income-driven repayment plan. Once you've made those 120 payments that meet all those requirements, your entire remaining balance, including interest, is forgiven. For those of you that are not working in public service, there's still a forgiveness option for you. Income-driven repayment forgiveness will forgive your remaining balance after you've paid for 20 or 25 years. There are 4 different IDR plans, and depending on which one you're in your loan types, you'll either pay for 20 years or 25 years. If you still owe a balance after paying for that amount of time, the entire remaining balance, including interest, is also forgiven. So these are some great forgiveness programs that are available to borrowers. Public service loan forgiveness can forgive your loans after 10 years of payments. Income-driven repayment forgiveness can forgive them after 20 or 25 years. I know they have a lot of requirements and it can be confusing to navigate on your own. So in your Savi account, you'll be able to see your eligibility for these programs and will help you take any necessary steps in order to get enrolled. What do I do if my payment is too high? So unfortunately, we do hear a lot about payments being too high, unaffordable, and unmanageable for borrowers. This is another reason why we're here, because we want to make sure that you're never paying more than you have to on your student loans. If your payment is too high, you can use Savi's personalized repayment estimator to explore other repayment options. After you've entered your information, we'll be able to show you exactly what's available to you, letting you see what repayment plans are available for you, what your monthly payment would be on each one, and what your total payment would be. That way, we can help get you that lowest payment possible. We recommend enrolling in an income-driven repayment plan to get those low and affordable payments. Enrolling in an income-driven repayment plan also ensures that your payments will count towards programs like PSLF and IDR forgiveness. Once you've entered all of your information in your main Savi application, we'll show you your options for lowering your monthly payment and even getting your loan forgiven. So we've made it really easy. Once you've entered your information, that results page will show you every option available to you for repayment and forgiveness, making it very simple to enroll in. Alrighty, so some next steps. One, we want to make sure that you have access to your Savi account. Many of you here are returning users who already have accounts. If this is the case, you can scan the QR code to sign back in and make sure you're good to go. If you're new to Savi, you can scan the QR code on the left to get signed up. You'll be able to search for the employer or a membership organization that referred you to Savi and be redirected to their sign up page. For those of you that are not able to scan this QR code, I will take a moment and put the link in the chat for you. So if you need to sign up for Savi, I just sent a link in the chat that you can click. You'll be able to search for your employer and get started. Next, we really do encourage you to select a Savi plan. Here at Savi, we do have different membership levels. It is absolutely free to create your account and see what you qualify for. So there's no cost to signing up, entering your information, and seeing what's available. We have a free DIY plan, which allows you to see what you qualify for and then submit the forms to enroll on your own. Our most popular plan, though, is our Essential plan. This premium plan unlocks all the features of Savi and lets us create your applications for you digitally, That way we can help submit them to your servicer and make this process simple and efficient. We'll also monitor your loans moving forward to keep you on track for forgiveness. So we'll monitor your applications, monitor your loan statuses to make sure that you're staying on track and the payments you make are counting towards forgiveness. And best of all, you can receive personalized support from student loan experts. Anytime you have questions about what you qualify for, you want to discuss your options, or you need a little bit of a guiding hand, you can reach out to our support team to get that one-on-one personalized help. Our essential plan, as I mentioned, is the most popular plan. You can enroll by clicking select a plan from your Savi dashboard. For a shortcut, you can scan the QR code in the bottom, which will take you right to our upgrade page. And reaching out for that support. If you need help at any time, we're always here to assist. You can click contact support from any page of the Savi application. We have our help center, which includes articles on common student loan topics, frequently asked questions, and even videos walking you through completing the application. If you're enrolled in that essential membership, you'll have access to reach out to our student loan experts, where they can give you that one-on-one personalized help. And finally, we have a call center available weekdays from 9 to 5. So feel free to give us a call and have your questions answered in real time. So wrapping things up, again, be sure you have access to your Savi account. Upgrade to Essential to make the most of Savi and unlock all the features, and complete your application to see what you qualify for. So that is all that I have for you today. I will stick around. I know we have some time left over, and I'm going to do my best to answer as many of your questions as possible. I want to preface there are a lot of you on here. I know I'm not going to be able to get to every question, but I want to do my best to ensure that you get the most out of this session. Great first question. Someone says, I have a Parent Plus loan. Is it eligible for forgiveness? Parent Plus loans, I think, are the trickiest student loans that are out there. The first thing to know about this type of loan is that because it's in the parent's name, this means repayment is based on the parent's income and forgiveness is based on the parent's employment. To make a Parent Plus loan eligible for forgiveness, it has to be consolidated into a direct consolidation loan. After that, it can only be repaid on one income-driven plan called ICR. So once it's been consolidated and enrolled in the ICR plan, it will then be eligible to earn progress towards PSLF or IDR forgiveness. I know it's a little confusing, but the great news is that no matter what type of loans you have, you can start a Savi application. We will help see where you're at and take any necessary steps to getting on track for forgiveness. Does the time during the payment pause count towards forgiveness? Yes. So normally, if you're not making payments, it's not going to count towards forgiveness. But the payment pause is a special situation, so they've made an exception. For any month where you otherwise would have been making payments, you can count that month towards forgiveness. You don't have to worry about calculating it yourself and figuring out what will or won't count. All you need to do is submit an employment certification form for the employers that you worked at during the payment pause. Mohila, who's the servicer that manages PSLF, will automatically go through and give you credit for any payments that count. I consolidated last year, but I have a few Parent Plus loans that weren't consolidated at the time. Can I still consolidate them now to get them into the PSLF program? Yes. So even if you've already consolidated in the past, if you have new loans that were taken out, or maybe you didn't consolidate all your loans, you can still consolidate now. Doing so right now will also ensure that it is included in the account adjustments, which will give you credit for any past payments you made before consolidating. If I started working at a PSLF employer after the pandemic began, but I had not yet paid on my loan, is it still eligible? So only time where you would have otherwise been making payments will count. It's not a free-for-all where everyone automatically gets credit for all the months. It's only months where you would have been making payments otherwise. So if you did not start working in public service and making payments until, we'll say, June of 2021, then you would only be able to count from June 2021 on. It's only the months where you were working and making payments normally. Multiple employers be used to make up the total of 10 years? Absolutely. Your payments do not have to be consecutive, and you do not have to be at one employer. If you have worked for multiple employers, all you need to do is submit multiple employment certification forms. You can turn in a form for each one of your employers, and you'll get credit for all the payments you've made. Even if you have gaps in your repayment history, or you have gaps in your employment history, that's perfectly okay. Once you've earned 120 cumulative payments while paying and working in public service, you would then qualify for forgiveness on your remaining balance. What if my payment amount is $0? I'm on an IDR plan. Getting a $0 payment on an income-driven plan is perhaps the most beneficial outcome. During months with a $0 payment, you are not required to pay on your student loans, but you will stay in good standing. These months with a $0 payment also count towards forgiveness. So if you've been approved for a $0 payment on an IDR plan, those months will count towards both income-driven forgiveness, and they would count for PSLF if you're working at the time. If you make a partial payment during the on-ramp, will that payment count towards your 120 for PSLF? Yes. So last year in July, the PSLF rules were updated to give people credit for partial payments. So if you make a partial payment and it's not for the full amount, that time will still count towards PSLF. We really do encourage you to make that payment if you can, or pay anything you can, just so that you can get credit for those months. How do I get my Department of Education loans and my private loans consolidated into one payment? So this is a little bit of a tricky situation. There are federal student loans, which are offered by the Department of Education, and there are private student loans, which come from other third-party organizations. These programs are only for federal student loans. And unfortunately, if you have private loans, those will not be eligible for these programs. This means you cannot pay them on an income-driven plan, and you also cannot receive public service loan forgiveness for them. You cannot turn a federal loan, or excuse me, you cannot turn a private loan into a federal loan. A private loan is stuck that way, unfortunately. It is possible to combine all of your loans into one loan through the process of refinancing, but we do not recommend this typically because this would turn any federal loans you have into private loans and would make them ineligible for all these programs. So if you have a mix of federal and private, it is definitely in your best interest to leave them separated. Keep those federal loans federal so that we can help you get them enrolled in income-driven plans and get this forgiveness. Because if you turn a federal loan into a private loan, it will not be eligible for these programs anymore. If I make more than my minimum payment on the save plan, will the additional money go towards the principal or the unpaid interest? So if you pay more than your monthly that's due, any excess that you pay will go towards the interest first. Once all of the interest has then been paid off and you don't have any outstanding interest, the extra amount that you pay would then be applied towards your principal. Will the new 5% on the Save plan apply towards Parent Plus loans? So unfortunately, Parent Plus loans are not eligible for the Save plan. Parent Plus loans can only be paid on the ICR plan, which is another income-driven one that's offered. Only direct loans can be paid on the Save plan. If you have FFEL loans or Parent Plus loans, those ones are not eligible to enroll. The 5% on Save is specifically for anyone who has direct undergraduate loans, and that will start this upcoming summer. Will my spouse's income be included if I'm enrolled into the Save plan? That depends on your tax status. If you are married but file your taxes separately, they will only use your income. If you are married and file your taxes jointly, both you and your spouse's income will be used to calculate your payment.
Hey, Jobe, we got a good question from a borrower who asked if any progress has been made on helping people with Parent Plus loans. You'd mentioned just before that they were excluded and not eligible for the Save plan. And I know we work with a lot of advocacy groups that are trying to push the Department of Education to include Parent Plus loans in future iterations of the Save plan. So we are continuing that fight. I am optimistic that we could see some progress, seeing as Parent Plus loans are the fastest growing demographic of student loan borrowers. So to introduce an income-driven repayment plan that does not meet the needs of the biggest demographic would seem counterintuitive. So we are trying our best here at Savi to advocate for every Parent Plus loan borrower. And if there are any changes or updates, we will certainly communicate that to all of our users right away.
Thanks so much for that. Do the months of the administrative forbearance due to servicer issues count towards PSLF? Yes. So as we talked about a little bit ago, whenever payments resumed, there were some issues with servicers. As servicers worked to correct those issues, they did place some borrowers into an administrative forbearance. If you've been put in an administrative forbearance because of these servicer issues, that time will still count towards forgiveness. So you don't have to stress about that missing out on anything by being in those administrative forbearances. When does the
a lot of questions from borrowers asking, how they can go about getting these credits certified for public service loan forgiveness. And there really is only one way to go about getting that credit to become official and getting that credit added to your account. And that is by submitting the PSLF Employment Certification Form, or ECF. This is the one and only form for the Public Service Loan Forgiveness Program. It gets signed off by you, the borrower, and then it needs to get signed off by your employer, either your current employer or any previous employers you might have had that qualify. So if you've worked for 4 qualifying employers over the course of your career, that means 4 separate employment certification forms. And that form needs to get submitted to MOHELA. MOHELA is the sole servicer in charge of the Public Service Loan Forgiveness Program, meaning anyone who has submitted that form or forms and they've been accepted, their loans would be moved over to MOHELA and they would continue to be with MOHELA until they reach that forgiveness point. So that's sort of the process that happens when you are trying to pursue public service loan forgiveness. We highly recommend here at Savi not waiting until you reach that 10-year point to submit those forms. You can be employed for a couple of months at a qualifying employer and submit that form, because it will initiate that process, get your loans moved over to MOHELA, and start certifying those credits, regularly, often, and that helps keep MOHELA a little bit more accurate as far as how far back they have to go into your payment history. It makes the whole thing easier. And just to keep in mind here too, for the past 3 years of payment pause, you're able to get credit for that period of time. And the Department of Education estimates once these one-time account adjustments go into effect, borrowers will receive on average an additional 3 years of credits. So that's 6 years total right there towards the 10 needed to qualify for full forgiveness on your loans. So if you have not submitted a PSLF employment certification form yet, and you are eligible, you've worked or are working for a qualifying employer, you have nothing to wait for. And everything to gain. So we highly suggest you submit that form as soon as possible. You could be a lot closer to full forgiveness than you think.
Thank you so much for that. And related to PSLF, I just saw several people ask how they can see their eligibility, see how many payments they have. And that is one of the benefits of Savi, is that after you have access to your account and filled out the information of your application, we will show you your eligibility for the program. So we will tell you if you work for a qualifying employer, we will give you an estimate of your progress, showing you how far along you are, how much forgiveness you can receive. And then if you're an essential member, we will help you to submit those forms to apply. So if you are needing to submit an employment certification form to get enrolled in PSLF, that you can use Savi's essential membership to create those forms, get applied, and get enrolled.
Yeah, just to echo what Jobe was saying, I see a lot of comments here from borrowers who had tried to certify those forms, but they weren't successful, or maybe they can't get their employer to sign off, or they might have submitted them to the wrong servicer. All of these issues are a big reason why so many borrowers are not successful in pursuing public service loan forgiveness. And so that's exactly why Savi exists. We take on all of that administrative burden for you. And so all of that paperwork, we send it to your HR to get it signed. If there's an issue, we are the advocate on your behalf. We're calling and following up. We're calling and following up with MOHELA to make sure that that application achieves its desired outcome. So that is our sort of commitment to you as the borrower. You don't have to worry about doing all of that on your own. It just takes a lot of stress and anxiety out of the process for most borrowers. And that's part of that essential plan as well.
There's a great question about the on-ramp, which is that temporary period where you won't be penalized if you make a payment. So again, just a quick recap of that. That started on October 1st when payments resumed, and it is in effect through September 30th, 2024. During this time, if you are unable to make your monthly payment, you will not be penalized for it. But keep in mind, payments are still due, and we encourage you to make them if you can, especially because if you don't make that payment, you will not earn PSLF or IDR forgiveness progress.
Yep, and a few more questions related to public service loan forgiveness. So, people are asking about, whether or not if you currently have MOHELA, or, if you don't have MOHELA, how can you get a MOHELA account? Again, the only way to start or initiate the process for public service loan forgiveness is by submitting the public service loan forgiveness employment certification form. It's the one and only form for the program. That gets submitted regardless of what your servicer might be. It could be Nelnet, Great Lakes, whatever it might be. That always gets submitted to MOHELA. Now, when you do it through Savi, we digitally fax it right to MOHELA. And we have a 99% acceptance rate because we remove all of the human error and make sure the forms are done correctly, and you know that it got there. A lot of borrowers are forced when doing it on their own to fax it, snail mail, things like that, and often end up having to resend because they never get confirmation that it's been received. But those forms go to MOHELA. MOHELA reviews them, and then if they are accepted, your loans, if they were with another servicer, move to MOHELA. And then MOHELA will create an account for you at that point. So there's no way to create a MOHELA account other than submitting that PSLF employment certification form and going through that process, having the loans move over, and that's when that account is created. Now, as far as Parent Plus loans go, I saw a couple of questions regarding, consolidating those loans in order to become eligible for public service loan forgiveness. The good news right now is that if you consolidate those Parent Plus loans, you will receive credit for payments prior to that consolidation. So you're not forced to start over. This used to be the case back in 2017, 2018. But now the program has changed. So if you have a Parent Plus loan and you want to pursue public service loan forgiveness, you will need to consolidate that loan, but you will be able to basically reclaim credit for payments and periods of time prior to that consolidation.
Hey, Lindsay, there's a couple questions on here maybe you can give some insight to. I've seen a few borrowers asking about spousal consolidation loans and what they should do if they have those.
Yeah, spousal consolidation loans, there have been some updates in the last couple of years around spousal consolidation loans. I am going to put in the chat, I'm going to find it right now because I don't want to misspeak. I'm going to put a link to the Department of Education's overview of spousal consolidation when it comes to public service loan forgiveness. That is going to be the most complete and sort of up-to-date explanation of what's going on. The good news is that they are allowing those loans to be separated and those borrowers to pursue public service loan forgiveness. So I'm going to put a link in the chat to the Department of Education that has sort of an overview on spousal consolidation. One question I just happened to see, someone asked, are there any coupons or sign-up discounts to join Essential from attending this session? Not from attending the session, although that's a great idea, but actually, Andre, and for anyone else, when you're in your Savi account on your Savi dashboard, on the left-hand side, you'll see something that says invite friends or family. And if you invite 3 friends or family, doesn't matter, you can just put their email addresses in, you will receive a 50% off coupon code to use towards that Essential price. So you can go ahead and do that right now. You'll get an email with that coupon code, and you can use that to reduce the cost of Essential by 50%. Some people asking about how often to submit the PSLF forms. Generally it's recommended that you do it every 12 months. That's not a sort of a strict rule there, but it just makes it a lot easier for the servicer to look back at a shorter period of time, for you to sort of remember to certify on a yearly basis. And so it's recommended that borrowers do it yearly. Now, of course, a lot of borrowers don't find out about the program until well into their career. And so end up, submitting that form for the first time, 7, 8, maybe 9, even past 10 years after working for a qualifying employer. And that's perfectly fine too. Just keep in mind, if you are trying to apply for public service loan forgiveness and receive that forgiveness, you need to be employed at a qualifying employer at the time that you receive the forgiveness. So you can't retire and then retroactively submit these applications and get that forgiveness. You would need to still be employed. Jobe, some people are asking, how do you know if you're going to qualify for the payments more than 20 to 25 years in forgiveness? Could you maybe give borrowers a sense of, what this one-time account adjustment will help them to sort of see or understand when it comes to these credits and what that means?
For sure. So these adjustments will be going through everyone's accounts, looking at your entire repayment history, and essentially it's going to be giving you credit for any past payment that you've made. So even if you were on the wrong repayment plan, if you had not consolidated and you had the wrong loan types, under the normal rules, those payments would not have counted and you would have just had to keep paying until you met the requirement. These account adjustments will be counting past payments, even if they didn't meet the normal requirements, so that you can get closer to forgiveness. In many cases, this will put you over the threshold needed to receive forgiveness. So we've already been seeing borrowers who've been paying on their loans for 20 or 25 years that are now qualifying for forgiveness after these adjustments have happened. So if you have been paying on your loans for 20 or 25 years already, and these adjustments happen, you'll be notified that you've already made enough payments to qualify for forgiveness thanks to the account adjustments. We have been seeing borrowers that receive the email letting them know, and then within a few weeks, the remaining balance is forgiven. So We encourage you to check to make sure that you have the right loan types to be included in these adjustments so that if you've already been paying for a while, you can be sure that you'll be included to get this forgiveness that you have earned. If you do not know if you need to consolidate, I've seen this question a few times as well. You can add your loans to your Savi account and we will check to see what type you have. So once you've added them to your Savi account, we will check, we'll see if you already have direct loans. And if you don't, we'll notify you and help walk you through the consolidation process.
Thanks, Jobe. And last thing, I see a couple questions from borrowers. They've been submitting their PSLF certification forms every year, and MOHELA keeps missing overlapping months. They're not getting the credits that they should be getting. Another borrower said, their PSLF forms are still in progress months and months later. Should they resubmit those forms? These are scenarios that are, I would say, more often the norm when it comes to PSLF rather than an outlier. Most borrowers experience some degree of either delayed processing, incorrect processing, or even incorrect rejections, meaning their application is falsely rejected, and they are indeed eligible. And so this is exactly where at Savi, we act as the advocate for borrowers. So we are very familiar with these situations because we encounter them every single day. We sort of are the middleman between you and the servicer, right? We're trying to reduce that friction. And so when these things happen, we know exactly what to do to either escalate that situation through federal channels, or we often know this is the best way to resolve that. It might be to resubmit the document. It might be to send a direct email to MOHELA. Whatever the situation might be, we're usually the best prepared to deal with it because we're working with borrowers and servicers and seeing those issues firsthand. And I know it is super frustrating for so many people. So that's exactly why we try to provide the service that we do. That being said, I know we are right at the hour. A huge kudos to Jobe for another wonderful presentation. Thank you, Jobe. It was just Jobe's birthday on January 1st, so everyone wish him a happy birthday. But Jobe, any final thoughts that we wanted to leave everyone with before we close things out?
First, thanks for all of your help with the questions. There was a lot we didn't get to. So next steps, if I can encourage any of you to do anything, it's please make sure you've got access to your Savi accounts, start working through them. And I really encourage you to at least get your loans synced to your account because that is the most important part. Make sure that you've got the right loan types to be eligible for these programs. And two, because of that account adjustment deadline coming up. We want to make sure everyone can get included in that. So by syncing your loans, we'll be able to check and help you get consolidated if you need to. So access your accounts and start working on those applications.
Yeah, absolutely. Jobe said it. I mean, if you don't have your loans synced with your Savi account, there's very little that we can do, right? That is really our visibility into what's going on. We're able to see what payments are going and hitting your student loan account, what type of loans you have. And based on all of that is how we're able to then communicate with certain borrowers who need to take action when these deadlines come up. And we're able to assist them that way. But it's also helpful for us to be able to make sure that when things do change, for example, let's say in the coming months that Parent Plus loans become eligible for the SAVE plan, you can guarantee that you'd be the first to hear about it from Savi. And so everyone keep an eye out on your inboxes. That's how we're going to be communicating any policy updates. And we always host these webinars on the first Wednesday of every month for all of our Savi users. And the last thing I will say is I'm going to put a link in the chat here. We're looking to try to build student loan ambassadors, people who, whether they feel strongly about their own situation, frustrated, mad as hell, or they've had an experience that they wish to share with others. They want to spread the knowledge that they've learned because they realize how difficult it is to deal with student loan debt on your own. We're looking for people who are willing to share their story, speak with others, maybe even help other people in their community, colleagues, et cetera, in spreading the word, making sure everyone has access to Savi and these resources. So I'm putting a link in the chat. If you are interested, if this sounds like something that you're passionate about or that you'd like to help out with, it's just a quick form, basically trying to gauge your experience as a student loan borrower and how willing you might be to share that with others. So we appreciate anyone who might be willing to help us sort of build a community here and reach as many borrowers as possible. And with that being said, we will close things out. Thank you all so much again to your amazing host, Jobe. We look forward to seeing all of you guys very, very soon. We hope you have a happy and healthy new year.